Oh boy, here we go again. Back to work tonight. Hope you guys had a fantastic Thanksgiving break, but it's about that time of day again, isn't it? Back to work tonight. It's Monday evening after all. It is the end, almost the end of the month, the 29th day of the month of November. As always, my name is Joseph, and welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for tomorrow. It's Tuesday, not just any Tuesday, right? End of the month, always one of the best times to be a trader. Got a lot of great trades on our radar for tomorrow. Charts are already in the background, as you can see. S&P's here, Nasdaq's here. Oh, you know the oil is always here. Glad to see you are here right along with us. Got the end of the month tomorrow. Got some big news tomorrow and some big moves on the charts today. That usually means some big opportunity for serious traders tomorrow morning in our trade room. Got a lot to cover tonight on this video. We'll lay the entire plan out for tomorrow's trading session. We'll cover all my favorite trades for tomorrow. We'll also cover some stuff to avoid to keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow in our trade room. As always, before we jump into the video tonight, though, make sure you subscribe to our YouTube channel. If you have any questions, drop a question in the comments section below. And if you guys enjoyed the video as much as I enjoy making it, hit that like button for me. Appreciate you guys tuning in. Make sure you subscribe. I don't want you to miss tomorrow night's video. But enough of the intro, though. Time is ticking. Let's get into these charts. Tuesday is right around the corner. The end of the month is, I can't believe we're already talking about the month of December coming right at us on Wednesday morning. Getting ready for tomorrow, though. Tuesday's trading session. Charts are all ready. S&P, Nasdaq, oil. Got a lot to cover here tonight. Got a nice strong bull market right now on the S&P. Now, the S&P is trying to do something the Nasdaq already did today. The S&P is trying to finish off what I call a snapback. Now, the Nasdaq already did its snapback. And what's a snapback? We're going to talk a lot about the snapback and kind of what that means to me tonight. So make sure you watch the entire video tonight. But the S&P, definitely bullish right now. There's no doubt about the bullishness. But I'll tell you, though, there's a range down here. And if these buyers can't get something going, we could easily collapse and get dragged back down into that trading range. Now, I am relatively bullish right now on the S&P, so I would like to see these buyers get something going here in the overnight, get some big targets, again, to complete that snapback target for tomorrow. We're going to talk about the snapback, how to buy it, how to sell it. We'll talk about my favorite trades in the S&P here as we go into tonight's video. Over on the Nasdaq is also bullish, as you can see, but the Nasdaq has already completed what I call the snapback. So you can definitely tell the Nasdaq, right, taking a little bit of a break, right, a little bit of a siesta right now and going sideways. It's a bull market right now into a range on the NQ. Buyers would love to buy some pullbacks here below that trading range. Buyers would also love to buy some breakouts going higher, got some big targets waiting overhead. We also, of course, with that range below us, there's that range from earlier in the session down there at 250. There's always possibility for a reversal. If we can get that reversal, we'll talk about a couple key reversal setups I have on my radar on the Nasdaq. But right now, just like the S&P, the buyers have control of these E-minis. And of course, over on the oil went all the way up and came crashing back down. Lots of strength going lower for those bears. The oil market right now has really one thing on their mind, and that is to get right back to those major holiday session lows around 67.41. I'm looking for shorts right now at the top of some channels. Would love to short some of these pops as we try to make the move lower. I also have some ideas of trading a short off the top at that 73, along with trading potentially a full-blown reversal. How do we know whether we're going to short the top or trade reversal? We'll talk about some ways to figure out whether it's a good short or whether it's a good reversal as we go deeper into this video tonight. So as you can see, a lot to cover in tonight's lesson: S&P, Nasdaq, and oil. Now, let's make sure first, before we jump into these charts tonight, let's make sure first we get on the same page, because got a lot of news coming tomorrow morning, just after the opening bell. Tomorrow, of course, is the end of the month. And what you always want to remember is the end of the month historically means we're going to see more volatility. So the rest of this week, you can expect it to be an uptick in volatility. We also know that we've got one of the biggest news events of the week tomorrow, that Jerome Powell testimony at 10 o'clock Eastern time. This is the big variable for tomorrow in my eyes. A lot of times the markets will really grind to a halt around that 10 o'clock hour. Tomorrow we've got Jerome Powell and Janet Yellen in front of the Senate Banking Committee with their kind of semi-annual testimony. They will be doing it again on Wednesday, but usually that Tuesday morning at 10 o'clock is the one you really got to watch out for. Now, it's always kind of a wild card. We don't really know how much the markets are going to react to this tomorrow, but be aware though, after we get to the open at 9:30, 9:45 Eastern time, just be aware if things start getting slow around that 10 o'clock, top of the hour, when Jerome Powell and Janet Yellen start speaking, you know what's going on. So we may have to trade around that tomorrow. We may also get a lot of action off that 10 o'clock, top of the hour. Now, keep in mind, we have already heard all the pre-prepared notes. If you follow the news wires, Jerome Powell published his statement already tonight. So the whole world already knows what he's going to say tomorrow at 10 o'clock Eastern time. But that will likely not stop these markets from reacting to them after 10 o'clock. So that's the big variable for tomorrow. Will the markets, will they grind to a halt and listen? Or will they play off of that announcement or that testimony tomorrow morning at 10 o'clock Eastern time? That is definitely going to be something you'll want to watch for. And if you could only be at your desk tomorrow for an hour, that probably 9:45 to 10:45 block would probably be the best time to be there. Hopefully, the market plays off that 10 o'clock hour, not grinds to a halt. But that's the big variable for tomorrow. We'll only know once we get there tomorrow morning. Now, speaking of tomorrow morning, don't forget, we're going to be in the trade room tomorrow morning, 8 o'clock Eastern time, Monday through Friday, every week in our trade room. I would love to trade this stuff right along with you. I'll put all the membership links you guys need to get registered and come out and trade with us every morning. I'll put that stuff in the description, and all the important links will be in the description of this YouTube video tonight. So grab that link, get registered, and I'll see you tomorrow morning at the opening bell. As we go later on in the week, get a bunch more big news coming. Wednesday, we've got the ISM manufacturing. Thursday, the jobless claims. And probably I would say probably the one is Jerome Powell, 2 is the ISM, and 3 is that employment number on Friday, that first Friday of the month. So quick recap here. Again, uptick in volatility. We do expect to see an increase in volatility over the next couple of days as we finish up this transition from the month of November into the month of December. We also know, of course, we got Jerome Powell tomorrow morning, and that is probably going to be the big kind of variable, the big wild card for our trading session tomorrow. I wouldn't worry too much about the rest of this news on the schedule, but keep your eyes on that 10 o'clock hour tomorrow. That is likely going to be where some of the best opportunities are going to be. Back to our charts tonight, though. S&P's here, Nasdaq, crude oil, ready to rock and roll. Let's grab the S&P first. Both the E-minis right now are bullish, but I'll tell you right now, the S&P and the Nasdaq are quite different when you look at the technicals here going into Tuesday's trading session. Let's jump into the chart here, and we'll go right on through my favorite trades for tomorrow. And again, if you have any questions, drop those questions in the comment section below for me. What's going on right now on the S&P? We see a big gap up. Right? That gap is a very important clue because that means last Friday's close is a magnet. Now, normally these magnets, these closing prices from the previous Friday, usually those Friday closing prices don't become a big deal until Wednesday, Thursday, Friday of the following week. But one thing you'll notice right now, and we'll talk more about this as we go deeper into this lesson, one thing you'll notice is if these buyers fail, right, that Friday close, that holiday low, right, that Black Friday low over there, the very low point of the day at 45.77. That will definitely be a magnet for those sellers, and it will easily be an objective if the bears can take control of this market at some point tomorrow. Nonetheless, though, here, buyers take it higher. They go right into a trading range, and you'll notice, right, the bulls get a nice, strong breakout and run higher. Now, that is a very strong move, and you'll see shortly in the Nasdaq, right? Unlike the Nasdaq, you would think with such a strong move like that, the buyers would have had no problem pulling back and retesting that high. We call these open loops in our trade room. They're kind of like unfinished business for the buyers. But look what happened though, right? Look what happened instead. Instead of getting that pullback and retesting the high, what's happened here? They've tried once, they've tried twice. Now we have a falling resistance trend line coming down now. So I'll tell you, if these buyers, if they really want this, they're not doing a very good job at showing it. Now, of course, maybe they're pulling back to some support levels, right? Maybe there's a little bit of a larger channel out here they're trying to pull back to. That may be the case. I am relatively bullish on this market right now. For one, just because of the strength of that move going higher. And really the second thing is because of this term I used earlier called the snapback. What exactly do I mean the snapback? Well, when I say snapback, kind of my nickname for whenever we have a holiday trading session, and you'll notice the Nasdaq has already completed its snapback. If you go back, and I know it's all a blur, right, over that kind of Wednesday, Thursday, Friday, Thanksgiving holiday, that little guy right there, that little session right there, that's Thanksgiving, right? That is that low volume Thanksgiving day. This is that Black Friday session, right? It was only a half day. Remember, the market closed at 1 o'clock Eastern time, and they probably prevented quite a bit of damage, right, from happening in this market for the bulls because it probably would have kept on going. Long story short, though, think of that old term, right? While the cat's away, the mice will play. While everybody's in a food coma off Thanksgiving, while everyone's doing their, Black Friday, whatever they do, shopping events, right? The market slides and runs lower. While the cat's away, the mice will play. Well, oftentimes what happens is we all come back to our desks after the holiday, right? The L-tryptophan finally wears off. We get back to life again. And now, oftentimes, what happens is the market will snap back to where it came from. It's almost like the market wakes up on Monday following a holiday, and this could be any holiday. This just happens to be the Black Friday. This could be a Monday holiday. It could be any holiday, right? So remember, most markets are open on holidays. There's only a couple times a year, Good Friday, New Year's Day, Christmas Day, and even this year, right? The Christmas Day and New Year's Day are on Saturdays. So the markets are almost always open, even though it might be pretty low volume when they are. So when the markets are open, right, even a half day on a holiday session like that, and they move, we oftentimes see that very quick, again, snap back to where, kind of where the holiday kind of left off. This is one of the biggest reasons why when you combine this, very strong push up, it's one of the biggest reasons why I wouldn't exactly count out these buyers just yet. Would I love to get a short off this high? Absolutely, I would, but I'm definitely aware of how common it is to get that snapback before we get to Wednesday or Thursday's trading session. So that's what I'm seeing right now. Buyers have all this momentum. They've got the snapback. They're still going to try, most likely, to finish off. Now we have to deal with this problem of this overhead trend line. Got a big deal for the bears right now. The bears would love to short off this trend line, and there's a beautiful trap set up right now, setting up either a trap off that high or a failure off that high. So although I'm pretty bullish overall on this market right now because of that snapback technique that I talked about earlier, I'll tell you, the technicals right now say you got to be thinking for a short, and that's exactly what I'll be watching for here in the overnight. So, think about it this way, right? If the buyers can take back control of this, if the buyers can kind of keep this thing going here, we can start to look for some longs going higher here. I've got some targets waiting up overhead at that measured move at 83.25. How do we buy it? How do we sell it? How do we trade this stuff now that you kind of know how I'm looking at this market right now? Well, first of all, I love this trap. This trap is a great setup as the market kind of turns over, get that trend line down overhead. The buyers don't have very much to work with right now as far as technical space to work with. It's a great spot for a quick scalp short that may turn into a nice big move lower. One of my favorite entries is a trap off a trend line. You notice too, you can also combine the underbelly of that channel. I really like that trap short as the market runs higher. And then keep in mind too, as if the market does roll over going lower, I can then find a new channel. I can mark up that high and I can look for a short off the high of that channel as well, right? So we can get a trap off the high and then find the entry short off the high of that channel. Now, I'm not going to go over all the specific entry techniques in this video, but the two most common entry patterns I always like to use off the top of that channel are traps and buyer failure patterns. Now, if you do want to get a much deeper dive into all the entry techniques, how we actually qualify the entries in our trade room, what I'll do is I'll put a link here for you in the upper right-hand corner. I'll put a little pop-up there for you in the upper right-hand corner. Grab a little pop-up, take the free quick start class, and that'll walk you right through how to set up all the right charts, find the right levels of support and resistance, and most importantly, how to trigger those entries. So the next time I say a trap high, you'll know exactly the rules we use to trade it. And then of course, once we get that move lower, I can find that channel and I can look for that short off the top of that, right, of that channel, right? That trap short and that one, what we call a 1, 2, 3 reversal pattern, and that short off the high. Now, keep in mind, this could really get, again, we're pretty bullish right now, but this could get pretty bearish here real fast, and you'll notice the amount of the move above that range can quickly pile up now and put us pretty much right back to that 45.90 area. That's one way I'd like to sell this market as it goes higher. Another way I'll be looking for, let's say, for example, the market pops up here and the buyers take a nice swing at this. I do not like this long right here at all. I think that's a little bit dangerous for that long right now for a few reasons. One of them, of course, again, is going to be the underbelly of this range. Now, what I wouldn't mind seeing too is if it can pop up here, get these buyers to try. If these buyers try and they fail into these highs, I think that's a great looking short as well, right? Buyer failure. Again, find that new channel. We'll drill down to our faster time frame and I'll find that short off the high of that channel, right? It's a buyer failure pattern. And then again, we'll look for that. You know, this is a 6,000 tick chart. We'll drill down to our faster time frame and we'll find the entries off the high of that channel. And again, I like to look for those traps and buyer failures off the high of that channel as well. Okay, so that's how I want to sell this market as we pop up, or right, if we roll lower. And if we roll lower here, guys, if they just roll over and start pounding lower, you still want to find those traps off those highs. This will be an easy short if we can get this thing going lower here. Draw that trend line off that low, bring it right up around these highs, find those traps off the highs, right? Trap patterns, failure patterns as we go back down, right? Trap setup, failure pattern, pullback combination. If you take that free class I mentioned earlier, you'll know exactly the entries that I'm talking about. That's how I want to short this thing as we go higher here, or if we collapse going lower. How would I buy this market right now? The buyers really have to show us, because here's the problem. The problem is for us to get above this trend line right now and hold that pullback, we're still buying right into that major high. So it's really not going to be very easy here until we can really see a breakout. Now, when it comes to a breakout, there are 4 different types of breakout patterns that we look for. I'll talk about a couple of them right now here. On the S&P, the most common and probably the most reliable breakout pattern is a 1, 2, 3 breakout. So we pop up above the moving average, right? Get above that trend line. The buyers come in, they hold that pullback, and they jump. Now we're not worried about buying into that high. Now we have a 1, 2, 3 move going higher. I can mark up that high. I can now mark up that new channel. I can drill down to my faster time frame and I can find my seller failure underneath the moving average, my bullish pullback setup going higher, that failure into pullback combination off the low of those new channels are very, very common. Where do we think the market wants to go if we get this 1, 2, 3 breakout into hidden channel pullback? Yeah, we're trying to take back those highs. We're trying to grab that snapback. Now, how about another one? right? Here's a second breakout pattern I'm watching for tomorrow. Let's say the market opens up in Asia and this thing starts to rip and run higher. If it really starts to rip and run higher, look for that two-try trap breakout, right? Strong move up, shallow pullback, higher high in price, and that trap below that low. Now, if you're lucky, you'll get some channel, right, and buy off that channel. It's not required, but that really does kind of kick up our odds of success pretty good. Remember, strong move up, shallow pullback, higher high in price, right? That trap, another really, I think, pretty easy money trade as we make our way back up to retest those Thanksgiving highs, right? Those snapback highs. Now, I have two more breakout patterns I want to talk about tonight, but I'm running a little bit late on this video. Let's keep this thing going. Let's go to the Nasdaq here, and we'll talk more about some different breakout patterns you could also apply to the S&P. So S&P looking pretty good. Again, I'm still pretty bullish on the S&P, but I do want, we got to get some proof, though. These buyers want to keep this thing going, and if they can give us a nice little short off these highs, I definitely won't say no to that. How about some Nasdaq here? How about some Nasdaq? Nasdaq, of course, is obviously very bullish right now, right? We can jump up into a series of what are probably relatively small ranges. If you were to look at a volume profile of this chart right now, probably a lot of volume right back there, right? So you would think that's going to be a little range right there, right? Probably a range back there as well. There's a range back there, right? There's a range back there. So we definitely can see the market is bullish. Little pit stop for a range. They push higher into another range here, right? So that range right now is one of the most important things. Think about where we are, though. There we are, snapback, right? See how I said earlier, the Nasdaq's already completed. So maybe the S&P will have some snapback envy and get itself going here, right? Again, that's why I'm very bullish still on the S&P. I will still be looking for the shorts on the S&P, but I'm looking for that snapback here tomorrow, back up to retest those highs here. So Nasdaq's already got it, right? Nasdaq has already completed its mission. It's gone all the way back now, and again, retested its highs. The next level now overhead is that 598, right? 16,600, that next major swing. And then from there, you'll notice that big jump up to that all-time high at 67.5. So right now, the buyers have control. We got a couple of ranges on the chart right now. You'll notice one big difference. There is no gap on the Nasdaq chart. So there are quite a few differences here between the Nasdaq and the S&P. What's the biggest takeaway right now? The big or the most important part of this? The most important thing right now is just we're in a range. We're in a range. We're bullish. We're into a trading range right now. When it comes to a range, what you want to think about first is who has control momentum. The buyers have control of this momentum right now. With the bulls in control, you want to find levels of support, okay, below that trading range, and you basically want to buy a pullback, right? Buy a seller failure pattern, some sort of entry setup, right, off support below that trading range. At the same time, we talked about those 4 breakout patterns earlier, right? We talked about 2 of them on the S&P. If the market does want to break and run higher, we can look for some breakout patterns as we go higher. One thing you want to keep in mind is the breakout leg can be used as a measuring leg. So you'll notice here, of course, I put that measured move kind of TBD, right? That to be determined. The breakout leg is the measuring leg. We don't exactly know where we'll be yet, but it will likely be up there at some point here tomorrow. So buyers again definitely have control of this market. We're trading sideways in a range right now. How do we trade it? What if we go down? What if we go up? What's the best way to trade this? What if we go sideways here? First of all, if we keep going sideways here on the Nasdaq, we don't want to get wrapped up in trying to force anything inside that trading range. What I want to do is I want to get this thing to pull back here for me. And when it does pull back, I want you to think about those 3 different types of pullbacks, right? 3 different types of pullbacks. One, for example, we have a channel here. So one easy way to get it would be a trap, right, off the channel. So what I'll look for here is, if I can zoom in this a bit closer here for you, what you want to think about is let's get underneath that range, Okay, the range acts like a magnet. Let's get those bears to try a couple times and give me a trap setup. That'll help me avoid buying inside of that range. Okay, so if we do pull back, shallow pullback, you want to get a trap on this. If we see a deeper pullback, your biggest obstacle here is going to be this trend line, right, coming down overhead. If we do see a deeper pullback as we go, now what you'll want to do is make sure you use that trend line to your advantage and look for your typical failure pattern, right? Failure pattern off that moving average. If it really pulls back deep, if we get back into this, 14 3/4 area, if it really pulls back deep, well into that buy zone down there, now you want to give them 2 tries and use that 2-try variation of the failure. And then remember, when you see a 2-try variation, this will oftentimes snap up and give you a trap entry right before you retest those highs. So again, 3 types of pullbacks, right? One would be a shallow pullback. And on a shallow pullback, I don't want to buy inside this range. So a trap entry will be your best bet, right? So shallow pullback, looking for a trap entry. If I see a deeper pullback here, what I want to do is, again, there'll be a trend line coming down. So make sure you avoid that trend line. Try to get those bears roped in. Once those bears get short off the moving average, you know exactly where their stops are, you know exactly where their pain points are, and we can buy into those stop losses. One of my favorite trades in a range-bound market, just wait for the pullback, wait for those sellers to get caught, and then buy right back up into that trading range again. And then again, if it really kind of falls apart, right? If the market really kind of tanks, right? If it really drops here strong, which could easily happen, give the buyers, right? Give the bears now the benefit of the doubt. Let them try twice. Once they try twice, now you got those stops sitting right above that high. Go buy right into those stop losses. And again, keep your eyes on that trap right before we retest that high. We call these 2-try failures. And then again, trap setups. We talk quite a bit about those here already. Where's the objective? The objective is to retest. Yep, the objective is to retest the high. So it's a bull market, right, into a range. Now, at what point can we start to sell this market, right? Let's say it pulls back really deep. At what point can I sell? I can sell this market once they hold the pullback and jump, right? Now, this does not have to be a very deep pullback. It could barely get a pullback going. If these sellers can hold that pullback and jump, right? See how the buyers are jumping off moving average, right? The bears have to do that as well. So as the market rolls lower, if the sellers can hold that pullback, right? If they can jump off the moving average, now we've got that range just sitting down there below us, acting like a magnet, right? That 240 area. If I can get that 1, 2, 3 reversal, I can now find that new channel. I can mark up that new high. Remember, drill down to your faster time frame. This is a 5,000 tick chart. Won't trade that tomorrow in the trade room. We'll drill down to our faster time frame. We're going to find that entry. That first test off the high of that channel, we're going to find that entry and look for that short. And again, a lot of times that entry, keep in mind, a lot of times that entry is a trap, right? It's just above a prior swing, little trap set up there, right? Trap of a prior swing. We go above the moving average. The buyers come in. They try to get long going back higher. They're failing because we're so bearish now. And of course, that failure turns into a pullback combination. All right, so trap, failure, pullback combo, all on our way back down into that trading range. And again, if you've taken that free quick start class I mentioned earlier, you'll know what I mean by a trap, a failure, right, and a pullback combination. So again, that will cover the short side, right, as we go down. And again, we pretty much know where this market wants to get to. It wants to get back down to into that trading range. Now, We talked about how to trade it as it pulls back, right? How to buy it and how to sell it. We're going to stay away from the range, right? How do we trade a breakout? Well, we've already talked about a couple breakouts, right? We talked about the 1, 2, 3 breakout pattern. That could easily come into play here on the Nasdaq, right? 1, 2, 3 breakout, find that channel. We talked about the 2 try breakout, strong move higher, shallow pullback to the moving average, right? Higher high in price, that trap setup. All of these, right? All of these are definitely worthy of our attention here tomorrow. And again, remember, the size of that breakout leg can be used as an ABCD, right? Size of lat leg will be used to find our target. So if we do see that strong run up, shallow pullback, higher high, right? And we get that trap entry there. Where's our target going to be? It's going to be that leg, right? That breakout leg doubled up, right? ABCD, that'll be where the market now wants to go, right? Where the objective will be, where our target will be as we go higher. Couple more, right? Couple more. We got 2 more breakout patterns I want to talk about. One of my favorites is always to use these highs. And so think about, for example, right, how that high, what if we jump up? Think breakout pullback. Now, I trade breakout pullbacks a little bit differently. The way I do it is I wait for that strong breakout. I then like to get that deep pullback to pull back right around those prior highs. The sellers now will come in and try to short this thing. They're going to think this range now is back in play. Don't trust those bears because remember, anytime you see a real strong move in one direction, the odds are very good we at least retest that high or at the very most get a measured move, right? The breakout leg is the measuring leg. So again, imagine now we really get a strong move up. Think about where that prior high is. Get that nice sharp pullback. Again, that will kind of spook or that'll fool a lot of the sellers. Let those bears now come in, try to get short going back in. And once those bears get short there, that's the easy part, right? Now you know where their pain is. Now you know where they're forced to exit for a loss. If you're caught short in a bull market, that short squeeze is pretty easy to get into, right? So you're buying right into stop losses with that failure. And then don't forget to add more on the pullback combination before you go back up and retest the high. Failure pattern, pullback pattern combination, size of the breakout leg is the size of the measuring leg, right? So we're going to use that for our targets going higher here. That's a second type of breakout, a third type. Last one here for the breakouts is the break and grind, right? The strong pop up. But now, instead of it jumping off the moving average or, right, giving us a 2-try breakout, now it grinds, right? Grinds and grinds and grinds. This happens quite a bit. It does, right? Especially in markets that we're seeing right now in this kind of, stimulus inflated market right now. We see a lot of these pops, right, and grinds as it goes. If that happens, don't chase it. Mark a trend line off that high, bring it right down to that low, and you know me, right? I love traps. Find that trap, right? On a prior swing, get that trap, get that failure, get that pullback combination, right? So, 3 out of the 4 setups we talk about in the quick start class, right? That's what you'll find off the low of that channel. Right, kind of that breakout and that grind. Wait for that, find that channel off the high, mark up that low, and you'll almost always get that nice deep pullback to give those buyers a chance to get into something here early tomorrow morning. Hopefully not right around that 10 o'clock testimony tomorrow. We'll see what happens as far as the timing goes. Can I short this thing as we go higher? Can I short it? You can, but you want to be patient and wait for the buyers to try once, buyers try twice, and use what I call a crown reversal pattern, right, for that short. Okay, so imagine now, right, we break out, but instead of a 1, 2, 3 breakout, instead of a breakout and pullback, right, now we're getting lower lows, a lower high. That equals a crown reversal for me. The range, again, is a magnet. Again, very bullish right now, so we'll have to stay patient on this short. But imagine, right, we pop up, the buyers try to keep it going, they fail, they go to a lower low in price, they try it again, and now that trap comes in. That's a great, one of my favorite reversal setups in a bull market. I call these crown reversal patterns as we come off those highs. And then don't forget, usually that momentum swings so strong, you can find a new channel off that low, new channel off that high, right? And then hit that first one. Remember, the first test is always the best test, right? So it's basically a bull trap, right? A crown reversal, let the market roll over, and then find that new channel, drawing the channel off those lows, and then hit it. Again, first test is always the best test. And again, I'm not going into a lot of detail right now on those entry techniques we'll use, but you can learn all the entry techniques I like to use in that quick start class linked up in the upper right-hand corner. So stay out of the middle of the range. Wait for the pullback, right? Couple pullbacks here we're watching for, and we'll see what we get tomorrow. You know, as a trader, we'll take whatever the market gives us, right? It's all you can really do here on this Nasdaq. Let's keep going here, wrapping things up here on the oil. Now, oil has a very good example right now of what we call a range rotation and a broken pendulum swing. Let's kind of set the tone though for the oil market right now. There's a big move down last Friday. Right? Big move down last Friday. What do we always talk about whenever we see a really strong move in one direction? It almost leaves unfinished business. So right now, as the market comes up and then starts to roll over here, where do you think these bears want to go? Yeah, they want to get right back down to retest that low, maybe even go a bit further down there, 66.5 and 67 even area as we go lower. Hopefully we'll pay a little bit less at the gas pump here next week. But we also can see too, the market gaps up. Remember, anytime we see a weekend gap, Friday's close, there's a gap there, right? That Friday close is a magnet. Now, it usually won't be a very big magnet until Wednesday, Thursday, Friday. This is usually doesn't become that big of a deal until later on in the week. But as you can assume, though, that'll be on our radar pretty much all week here this week. We pop up, we go right into a trading range. We pop up, go right into a range. The buyers get that nice big breakout going higher, but they couldn't hold it, right? This is why I always say, make them hold it, right? Give me that 1, 2, 3 breakout, right? Or give me a higher high, right? A higher high and a 2-try trap. None of that, right? So we didn't get a 1, 2, 3 breakout. We didn't get a breakout pullback. We didn't get any of the breakout patterns we've talked about here so far. The price goes up. The buyers try once, buyers try twice, and they collapse back down in. Now, we measure the amount above the range, down below the range. That creates the pendulum swing. It makes perfect sense. You'd see profit taking for the bears and buyers coming in. The buyers have to take this thing back up, right? They have to hold this pullback right now, or you get this, that rolling over. At this point right now, we've got momentum now firmly in the hands of the sellers. We've got falling resistance trend lines coming in overhead. This is a bear market. Now, the buyers may hold this. The buyers can always, nothing is ever guaranteed, right? Anything can happen overnight. But right now, these bears have a very commanding control of this momentum here. And with that big low from last week, with that big low down there, it's tough not to be thinking about the short side trades here, at least for now on the oil. And I would think that kind of the underbelly area of that range will be a great spot to find a short. I also think that unless these buyers can really show us something, we may end up going up and doing it again, because again, you get the range right there. So the buyers have a hard time in front of them. Not to say the buyers can't take control of this and go higher, but it's just right now, the buyers have to show us that they really want this. They got to prove to us they can hold control here, because they had literally everything on a silver platter earlier and they just completely fell flat in their face. So how do we trade this stuff right now? How do we sell it? How do we buy it? Where are my favorite trades for tomorrow? As we go higher here, there is whenever, again, as I mentioned many times before, whenever we roll over like this, you want to draw those trend lines down off that low and then kind of pin them up at that high. That's going to give me now kind of where I want to sell this market. The big question mark I have right now is how does this trend line react? What you want to think about when it comes to these kind of trend lines as we go is the best way to trade this stuff is to get underneath and use it. There are basically two ways to short this thing. One would be off the underbelly of that trend line, which again, I think looks great around that area too as well. Or sometimes we don't get the entry off the trend line and we can sell it short, which is simply a failure pattern, right? So imagine this trend line coming up. We're stair-stepping now off this low. We get up into these highs. I want to sell into it, but I want to sell right into that trend line. So now as we pull back, the buyers come in. The buyers try to get long off the moving average. All their stops now are sitting right below that low, right? All those stops, all those buyers trying to force this thing going higher here, their stops are all now right below that low. I can sell again. I can sell off that trend line, or I can sell into those stop losses. And then if we get lucky, we'll see a trap set up right before we retest those lows. Traps are always the best because they get you in at a high price, right? So a trap would also be great as you come off those highs. It's kind of what we call a two-legged pullback setup, right, off that trend line, right? One leg, two leg, right? So one leg, two leg going higher there. Two-legged pullback, right, off that high, not 2 LP off the high, right, that failure, right, off the moving average, and again, that trap setup coming in off these highs as well, right? So two-legged pullback, probably the ideal entry, or a failure around the moving average, or a trap setup. Again, you'll see a lot more details and a lot of examples of these setups in that quick start class I keep mentioning. Now, as we go higher here, at what point could I be a buyer on this? Could I buy this as we go higher? You can, but you have to think about momentum. Okay, what's the key to turning momentum? We have to get above the moving average and hold, right? Didn't happen over here, right? So we have to get up around those highs. The buyers have to hold this and they have to jump. If they can get that going, there's no reason why I can't find that new channel and find the entry off the low of that channel, right? Or maybe the market really rips higher, right? Strong move up, shallow pullback, higher high in price, and that trap. Yeah, that'll be a bit scary. It definitely will. But remember, anytime you have enough momentum, when you have enough momentum in one direction, the odds are so good you're going to retest the high. That's a trade worthy of take. It's definitely worth taking. Now, would I push it into these highs up here? Probably not. Right? In fact, we may get something like this where we get that pop up, the buyers come in, they hold that pullback, they jump and go higher. We get that 1, 2, 3 reversal pattern. We get the entry off of that low, whether it be a trap setup or a failure or a pullback combination, right, off of that low. But then we take out that high and then we start looking for what? That short back into the range again. At this point, though, now what's the problem? The buyers have all of the momentum. What was that short we talked before in the Nasdaq? The crown reversal, right? Let them try once, let them try twice, get that trap, right, and back down. Now, I will definitely admit, on this particular example, because of that range and that high, we probably don't need that trap. So as long as I can get some sort of, of resistance level, like a trend line, right? Something like that. Like, see how that trend line comes down there? We pop up, right? Buyers once, buyers twice, back down again. That same type of pattern can easily be applied to sell off the high of that trading range. So this should be interesting to see what happens tomorrow if these buyers can really get this thing going because, again, I have no problem being a buyer on the way up if momentum can confirm and we get a pretty good setup, but you're going to have to wait and see how the market reacts around that 73 area. If the buyers can break above that 73, that 74 half level, right below that 75 area, there's a big range up there, big round number. So, if the buyers can get this thing really pushing here and push that 73, that 75 looks a pretty easy objective here, right, for those bulls. But again, right now the bears have control, so I do want to focus on the sell side here right now until these buyers can take control. What if we go lower here, right? What if we go lower? Well, I think first of all, too, what if we go sideways? You can see this might be a range here. This isn't a range right now, but what if we went sideways here for a bit? What would I do? I would find levels of resistance above. I'd wait for the breakout. I'd wait for those buyers to come in and try to buy the pullback. And once they do, their stops are showing, and I can now sell into those stop losses, right? Those buyer failure patterns that are very, very common when you have a trading range, right? This one was more bullish than bearish, but same idea, right? We go up. In this case, you want the buyers trying twice because you're so bullish, but same idea though, right? Wait for those buyers to come in, try to come in off that pullback and just simply trade right into the stop losses. It's the same basic idea as we look for over here. If we end up going lower, right? If we end up going lower, your bread and butter as we go lower here is going to be a trap. Okay, let's say for example the market rolls over and runs lower here, right? If that happens, those trap setups are going to be your favorite because you're not going to want to push it too far into that low, right? I want my profit target to be at that low. And so as we go lower here, if we do go lower without getting a pullback on this, think about how you can rope in some buyers here, get a little bull trap, buyer failure, right? You just want to make sure, again, I would think a trap setup would be your best opportunity if the market just kind of rolls lower here. But that trap, that failure, that pullback combo, as again, we should take out those lows at 67, 41 and change. If we do end up down around this area, be careful. There's a lot of support down here. Get that runaway zone around 67. But I'll tell you, as always, right? As always, if they can, let's say they do get up, right? Get that collapse back down again. Let's say they, pull back and they blast right through that area here again. If there's enough momentum going through, who cares where you are? Mark that new channel, grab that pullback, drill down to your faster time frame, and when the markets are trending, I love to use channels. That's where that's where my favorite entries will always be. When the market's ranging, I focus on failed breakouts, right? Fade the breakouts back and forth, buying low and selling high. Again, as I mentioned repeatedly here tonight, I cover a lot more detail of all my favorite setups and how we trade them in different conditions inside that quick start class. So definitely make sure you grab that to learn more there. Hopefully by now you've hit that subscribe button, you hit the like button here on the video, and hope you guys had a great Thanksgiving. It feels good to be back here tonight on the YouTube channel, rested, refreshed, and ready for a big week to finish up the month of November and kick off the month of December. Don't forget, again, I'll put all the membership links you guys need in the description of the YouTube video, so grab those links down below. Don't be afraid to call the office if you have any questions along the way. And again, you can always drop questions in the comment section. I'd be happy to answer them down there as well. In the meantime, enjoy the rest of your evening. Hope you learned a bunch in the video tonight. Hope you use it to earn a bunch tomorrow morning. And as always, I hope I'll see you tomorrow at 8 o'clock Eastern Time with the rest of the members in our trade room. That's all from me, guys, tonight. I'll be back tomorrow, same time, same place. Be there or be square. We'll finish the month of November and get ready for December in tomorrow night's video newsletter. Once again, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.